So I have something in my hand that will help you trade sports markets. They will help you trade financial markets. It will help you trade pretty much any type of market, because what it is an analogy for the way that you should actively be trading. What is it? It's a golf ball. And this sounds a bit odd, but in fact, when you're trading sports, there are some great analogies with the underlying sports themselves. And I think I've spotted one with golf. So when you're playing a game of golf, it's about getting around those 18 holes in the least number of shots. So there's a number of ways in which you can do that. But when you actually look at your overall objective, it's not about how you perform on each individual hole. It's about how you perform over the course of those 18. That's what will get you the prize, not how you perform on one individual hole itself. And therefore, that changes the way that you place individual hole. Your objective most of the time in golf is to actually sort of stay in the game, to stay within a few shots of the leader, to keep your game under control, and to try and get around all 18 in the least number of shots. Okay, you're going to have the odd problem here, or you may perform a little bit better than you expect somewhere else, but ultimately it's that aggregate score that matters. And when you're sports trading, it's that aggregate score that matters over a large number of markets. You could get lucky, you could get a hole in one, or you could have an absolute nightmare and get a snowman. But as a consequence, the way that you approach trading a sports market and the way you approach golf is fairly similar. You're not looking to do something spectacular on one individual market, on one individual hole. What you're looking to do is to get a good aggregate score over a long period of time. Now that could be 1 day, 1 week, or 1 month, but nonetheless your objective when you're actively trading a sports market isn't that dissimilar to the way that you play a round of golf. So when you're actively trading a sports market, what you need to do is vary your approach and strategy according to what you see or what you expect to see. And you do exactly the same in golf. When you're on the tee, you're probably quite likely to use a driver. It's very low loft. It's going to drive the ball a long distance. And you would definitely select that if you're playing a par 4 or 5. You want to hit the ball as far as you can to enable you to get a decent second shot. Now, you don't turn up and drive with a putter, do you? Because that will get you maybe 30 to 40 yards on a green, but it's not going to get you very far on a par 4 or 5 hole. And so as a consequence, you need to vary your club selection depending upon what you expect to see. A driver off the tee, an iron into the green, and then you finish with a putter. If you're actively trading a sports trading market, you need to do more or less exactly the same thing. There'll be different phases within the market when it's lower liquidity, higher liquidity, and when you're trying to exit. You need to vary your strategy and your tactics according to each phase of that market. But also on that particular hole, on that particular market in general, you're going to have to approach it with a sort of game plan in mind. This is the sort of club that I'm going to do. This is the type of trade that I'm going to do. This is the way that I'm actually going to play this out. Now, it's not impossible. You could get into trouble, but ultimately you need some sort of plan to be in place. If you go around the entire golf course, Freudian slip, golf course, hitting a putter, can you imagine if you're up against somebody that has a full set of sort of, 12 or 14 clubs, they're going to be able to vary their shot repeatedly as they go from one hole to another. Now, a putter, you may be able to get away with on a par 3, but you will not be able to get away with it on a par 5. So you need to vary your club selection depending upon what you see in front of you. And when you're actively sports trading, you need to vary your selection as well. A small market with a narrow traded range, that has a specific strategy. A big market with a large range, that has a specific strategy. And what we're talking about here is sort of a par 3 and a par 5. You need to vary your strategy according to what you see. And your club selection, your strategy selection in that individual market will help guide you more effectively around a course than somebody that's just a one-trick pony that has one club and is trying to repeatedly defeat the golf course by just using that one club. Vary your strategies and tactics depending upon what you see. So it's inevitable when you're playing golf or you're actively trading a market that you're going to get into trouble. So what do? Do you get your driver out and try and absolutely whack it out of the rough as hard as you possibly can? Or do you take a more pragmatic approach? Do you sort of say, well, I'm going to drop a shot here, but in fact, that's better for me longer term over this particular hole and over the course of the day, over the course of 18 holes. You may sacrifice a shot now on the basis that it doesn't matter in the long term. And it's exactly the same with trading. what you will do is you'll be willing to take a loss on the basis that things will average out in the long term. And it's often better to take that penalty shot rather than to try and avoid it. You could end up in much worse trouble. So when I first started to play golf, I had to learn somewhere. So I went to my local pitch and putt course. A friend of mine took me there and he taught me the basics, basically using a pitching wedge or a 9-iron and pitching and putting, getting the ball somewhere near the hole and then putting it out with a couple of strokes, or hopefully a couple of strokes at least anyway. And as a consequence, I became quite good at my short game. Approach shots were pretty good, putting was pretty good. For the first time I stepped out on a championship course, it was a disaster. My driving was terrible. I was all over the place. So I began to realize that there were certain things that I was good at and certain things that I was bad at, and that I'd have to practice at one or the other. Now, the advantage you get in a sports trading or a financial trading market is that, in fact, you know, there are things that you will be good at, and there is no obligation to continue to play the hole. When you're playing on golf, I remember looking at the scorecard and sort of thinking, oh, you know, hold on a second here. There are a lot of long par fives on here. I'm going to have a nightmare. And performance anxiety. But what you tend to find is that you tend to try and compensate for that one way or another. But when you're actively trading in a sports market, you can just ignore the market altogether. There is no obligation to trade. Unlike in golf, where you have to actually go out and do your best at every single hole. You can actually just skip forward a hole or two and selectively play the ones that you so wish to do so. So it's very rare to be good at absolutely everything. It takes a lot of practice and years of experience. So as a consequence, when you're actively trading on a sports market, if you like the par threes, just play the par threes. If you like to smash the ball on a par five, then maybe you should just play the par five. So there are parallels here, but there are also a few differences between playing a round of golf and actively trading on sports. So there are a couple of important lessons to close with here, and I think that they are some of the most important ones as well. I can teach you how to trade, but that doesn't necessarily mean that you will be successful or you will be able to replicate what a professional teaches you. Can you imagine having a few rounds with Rory McIlroy and then expecting somehow to be able to beat him? Your objective really isn't to beat Rory McIlroy. It's to get around in the fewest number of shots. To imagine it, you know, sort of protecting your bank, making as few mistakes as possible. I always think that golf is a loser's game, because ultimately what you're trying to do is make as few mistakes as you possibly can. And then when you see opportunities to progress and improve, you can take them. And it's pretty much the same in trading. Your first objective really is not to lose money. And then from that solid base, you can begin to build out from there. However, if you go out expecting that you're going to be some sort of superstar trader immediately, that's not realistic. And if you take lessons, say, from a Rory McIlroy, there's no way you're going to replicate his year's worth of experience. But also, I think the most important lesson that I learnt in golf also replicates itself in sports trading markets. I would often play pretty well when I was going out with my mates and we were just having a quick hack around the local course. But whenever I played in competition, my game seemed to fall apart. It was a real problem for me. So I went to a coach and we talked through my entire game, and we realized that in fact the biggest problem that I had with golf was up here. It was my, when the pressure was on, suddenly the ball seemed a lot smaller, the hole seemed a lot further away. And as a consequence, my mind was beginning to play tricks on me and I wasn't playing in a nice, relaxed mode. So what this professional taught me to do was nothing to do with golf. He taught me a bit of game management and stuff like that. He actually taught me how to play golf with a settled mind, basically, to enjoy it and to actually go out there and do all of the stuff that I'd been taught, not to focus too much on exactly what was in front of me. And I think that's pretty important, because I found exactly the same with trading. If you're focused too much on the outcome of that particular trade, rather than just doing a very good trade, then it tends to influence the outcome of that particular trade, which is deeply annoying because that's going to repeat endlessly and make your life an absolute nightmare. It's much better if you go to the market with a set plan, you execute that plan, and you sort of try and think as little as much about it as possible, and you just progress forward from there. If you overthink it, you'll start to get performance anxiety creeping in. The invisible hand in your mind will force that. So it's much better to be able to control that and control your emotions to be able to improve your trading, just the same way that I learned to do that within golf. And ultimately, in both golf and a particular trading market, the battle is not with the market itself. It's very often within your mind and with yourself, not that particular market. So yeah, there are lots of parallels I've found between playing a sport like golf and the way that I would actively trade sports markets. I hope that's been useful for you.